Hey everybody, this is Rob Keens at goldsilverpros.com. I have a very special first-time guest on the program. I have Chris King, Senior Vice President of Corporate Services, OTC Markets Group, joining to discuss the OTC markets and the importance of those markets for US-based investors, particularly with regard to resource stocks that we cover on the channel all the time. Chris, how are you doing today?
Good, thank you, Rob. Pleasure to be here.
So wanted to have you on the program because we're doing a professional series, and the role of the professional series is to bring more information, more view into how the markets actually work for investors. They can educate themselves, and also maybe to advertise your services a little bit to companies that may be figuring out how do they reach the US market and what are the best ways to do that. So I wanted to start off and just, if you would give a little bit of your background and what you do for the OTC.
Sure. So my professional background before joining OTC, I spent about 15 years in the capital market space, predominantly helping multinational blue chips access the US. So that's, targeting, messaging, and general investor relations. And then in 2014, I joined OTC Markets, where my current role has me helping companies to get set up for efficient trading in the US. So, basically what that looks like is education more than anything. Every company has to make their own decision, but I think you hit the nail on the head. I think the conversation today can focus around, what do investors need to know and what the companies need to know.
So what kind of companies will come to you to get onto the OTC? What is like the general profile of companies that you look for?
We have a wide variety of companies that trade on our market. So there's actually more than 12,000 securities quoted on our market every day.
Okay.
If you were to break that down, there are probably just shy of 4,000 companies for whom we are the primary market. So it's not a stock exchange, but their main listing is on OTC. And there's about 8,000 companies for whom we provide secondary trading in the US, where they are actually listed outside the US. And then in terms of sectors, all sorts of companies of different sizes and different sectors. So that's, fintech, biotech, resources, cannabis, blockchain. We're agnostic in terms of the industry, but I do think that, companies that succeed here are those that tend to have an investment proposition that is well understood by the US audience. So I think resources, for the sake of this discussion, is a perfect example. We're seeing extreme interest from US, both institutional and retail, in resources. But there's more than 35 countries represented, listings from across the globe that all come here and think the US is really where it's at. So that's why they join.
Okay. So for companies who may be interested in getting on the OTCs, could you explain a little bit of the difference between the OTC versus another market like the TSX or the NASDAQ, or what people may traditionally see as the major exchanges?
Yeah, so I think OTC, when people think of US financial markets specifically, they tend to think about the exchange model. So naturally that would be NASDAQ or NYSE. We operate the largest ATS, or alternative trading system, in the US. And so if you think about the guys trading Amazon and Tesla and Microsoft all day long, they need a venue or a system to be able to make markets and communicate electronically with each other, to be able to trade non-NASDAQ NYSE stocks. So I think certainly if you think about secondary trading, if you're public in Canada, you're on a G7 exchange, you're in a highly regulated environment, very transparent and shareholder friendly, we would basically be the venue of choice to allow you to be publicly traded in the US, in US market hours, traded and quoted in US dollars, without having to take on the sort of the cost and complexity of a dual listing, where now you have a second regulator and a second form of reporting with the SEC, the cost of Sarbanes-Oxley and all the other things that come with a dual listing. So that's probably the best summary of sort of the different market venues within the US. I think you mentioned the TSX or the TMX group and different exchanges globally. Being on one of those exchanges actually gives you the fast track to be cross-traded into the US. So you can rely on your status in a Canadian exchange listing. In the same way I mentioned about 35 countries are represented on our markets, these are companies who have no interest in a listing in the US. They don't want to take on the burden. And so having that status on a foreign exchange, a non-US exchange rather than a foreign exchange, allows them to benefit from SEC exemption 12G32B, which means that they continue to report through the home market but can be public in the States.
Is there any functional difference in trading on the OTC if there is some of the other markets? For example, if somebody's used to trading on the NASDAQ and they're interested in getting into some of these companies are listing on the OTCs, is there anything functionally different from accessing them from the broker perspective, or is there anything that they have to know before that they can trade stocks on the OTC?
I would say generally that the investor, assuming that the plumbing is in place, and we'll touch on that a little bit as we get into the different tiers of our market, how those companies are set up and traded. But generally, if the plumbing's set up correctly, the investor's experience trading an OTC quoted security versus a NASDAQ or NYSE stock is the same. And so, again, we'll get into the different tiers and the types of companies on our market. But as an example, you've got Adidas, Heineken, BNP Paribas, Danone, Roche is our largest client at 300+ billion market cap. They choose our QX market, the top market tier, as their US trading venue. Clearly, they could trade on any US exchange, but they know that investors get the trading function and, importantly, the compliance function for brokers. That's all met with QX. So the short answer to your question is investors, if the company has sponsored the program and set up correctly on OTC, they'll be good to go to just buy and sell the stock freely.
Okay. And yeah, now would be a good time to talk about those different tiers. I know you have different tiers set up for different companies. What are some of the advantages of each one?
I think the easiest way of differentiating our tiers, and just to list them, you've got QX at the top. We call it our best market, and I'll elaborate a little bit as to why that's the case. But then you've got QB, which is our venture market. QX has about 500, well, I say about, just last week we hit a milestone actually. There was big celebrations around the fact that we hit the 500 company mark. QB has over 1,000 companies quoted on the market. And those two tiers are what we call our premium market tiers. So this is where the company is basically sponsoring the program, the quotation. They own that, they own the ticker, they're posting materials through our system. You know, that level of engagement is very important, not least for news flow, but also for comfort and risk management exercises for the brokers for whom you rely on for liquidity. So they're the premium tiers. You then have a tier called the pink market, which many people are probably familiar with in some form or another. There shouldn't be a negative stigma behind pink, but the fact is that there's a complete disconnect between a pink market security and a QX or a QB. And so, you know, if you're looking at a pink market security, they tend to have wider spreads, meaning that it's going to cost you more to buy and sell. Definitely less liquidity. Often just the cost of trading pink market securities is higher. And there are brokers that just simply won't execute on a pink market stock. So, you know, I could talk all afternoon about the major differences, but I think generally the fact that the companies who own their ticker symbol tend to fare far better than those that perhaps sit on the bottom tier of the market.
Understood. So I think you mentioned, was it 12,000 companies that trade on OTC, or was that the right number?
Yeah, about 12,500 securities total.
Yeah. So in terms of makeup of those securities, you said it spans across the spectrum. If you're wanting to get into biotech or technology or resources or maybe industrials, you have a wide range of different stocks that people can choose from.
Yeah, many of them are household names. I mentioned a few of them earlier, but you know, you only need to start looking at, if you're a resource investor, you know, you can go on otcmarkets.com and put in the company name, and you'll be able to see if they're on QX or QB. You'll see all of the information, the research. Companies are posting fact sheets and slide decks. You'll see level 2 quotes, which gives the investor a great deal of comfort and better access. So yeah, I think checking out the website just to get a feel for the types of companies that are there, and obviously research based on the sector that you're interested in.
So talk a little bit about the flow of funds that come into the OTC. How are you guys doing in terms of trading liquidity on a lot of your stocks? Do you see a lot of activity on that market?
Yeah, I mean, there's been a lot of headlines this year around sort of rise of the retail investor, or perhaps a renewed focus and interest from companies that in many cases rely on retail investors, right? I think companies have dreams of being on, the main board and being able to knock on Vanguard and BlackRock's door, but the reality is, if a company is sub 500 million US market cap, they tend to almost be entirely a retail play, with the exception of perhaps some of the smaller funds.
So with regard to the stocks that trade in your exchange, what are you seeing in terms of flow? How much business are you getting, and has it been good for the companies that have listed on the OTC?
Yes. So the trading volumes, like many markets on OTC, the trading volumes have spiked tremendously over the last year. And it's been generally a positive. So first of all, the technologists stood the test, but with record volumes, it's been interesting to see kind of how that's played out on different tiers. So, when people think of OTC, they typically think of the retail investor. There's been no shortage of stories about how active or more active the retail investors have been in the US over the last 6 to 12 months. But interestingly, with record volumes, I'll give you a good example. The QX market, if you look at the client numbers, they represent about 4.5% of our total client base. And yet the volume going through QX is about 34% of the total volume. So it's been interesting to see sort of a reinforcement of everything that we do here to make QX better, less friction for trading, more attractive, better corporate citizens out of these companies, and they benefit with the volume associated. But we're over the last few months, we've seen about $75 billion of dollar volume across OTC. But with these international stocks that have a listing outside the US, many times the broker takes the order in QB or QX or Pink, but they actually lay it off into the home market. And so great volumes on our market, but it also feeds then directly into growing the volume on the home exchange too.
Yeah. It's interesting that you bring up the retail investor. We work with a lot of the resource companies who talk with their executives all the time. And one of the main things that they're trying to do is keep the word out on their companies, especially if they're a smaller company and they're really trying to get, that marketing to support their price. And it's the retail investors that really support their price, which is critical to them for financing all of their activities. They're drilling and they're mining and building the mine and so on and so forth. So the retail end is extremely important. In terms of the resource companies, have they expressed to you thanks for being on the OTCs and how you guys have helped them out in terms of helping them give an outlet to the US market, which is a huge market, by the way, whereas potentially otherwise they may be stuck in only dealing with the Canadian markets?
Yes, I think we appreciate all of our clients, but I think it's fair to say that over the last 12 months, Canada has continued to be a prime market for us outside of the US, the largest market outside of the States. And by that, I just mean the most companies come to us. They understand that the US is where it's at. They, to your point, want to lower the cost of capital, achieve fair valuation, better liquidity, grow shareholder base. Maybe they're doing placements here and have US investors who need the US to deposit certificates and buy and sell the stock. So it's been, I talk about this in terms of the last year. I guess we separate pre and post COVID lives, but for years now, we've been enjoying a great working relationship with many of the stock exchanges globally. And the companies definitely appreciate, I think, as much as anything, the additional sort of visibility functions that we weaved into the quotation. So, we charge a subscription for QB, we charge a subscription for QX. It's a relatively small amount in the greater scheme of things, but when companies can sort of look back and see that there's been a steady increase in everything that we've talked about, those key metrics, right? Valuation, liquidity, US ownership, that just helps them drive their corporate strategy. The two are very closely connected, so it works tremendously well.
We often work with private companies as well as the public ones, especially in the resource space. A lot of times it starts off, they're a private company. They build the mine, they use private investment. Then when they go to list, it could be a year process to list on one of these major exchanges. Do private companies have an avenue to get listed on the OTC? Do they have to go through another exchange first, or do you have facilities to help them get onto the OTC as a first listing?
We're certainly happy to help with that. The fact that there's 4,000 companies for whom we're the primary market tells you that there's certainly a need that's being served here. I think that there's a lot of misconception out there driven by different vendors around the need to be on a US exchange. We are a stock market, and we have the same major brokers quoting OTC securities that trade exchange listed securities. And so I think our venue provides early stage, perhaps smaller companies for whom stock exchange listing would be out of reach or perhaps ludicrous in terms of shredding shareholder value and spending the money. And so we've seen it many times over the years where perhaps a company starts, they have a small number of early stage investors. They want a liquidity event. Being public on our market is, you have to have disclosure. You're in a highly regulated environment, but generally the cost for smaller companies, it makes far more sense to be public here, at least to start, work your way up through QB, the venture, and up to QX. And then there's a decision to be made. It's normally driven by the need to perhaps raise money. That would be one of the reasons why companies tend to uplist at that stage.
Yeah. In terms of the rest of 2021, what are some of the goals that the OTC is looking to realize in terms of their market reach, or what are your main goals for the rest of this year?
Well, having just got through to that QX 500 milestone, I think we're keen to kick on and continue to educate and handhold companies who have an interest in getting into the US. I mentioned before, it really is about education first. And so, hosting these kind of conversations, working with stock exchanges globally, I think more than anything, number one priority from the corporate services team is, really just providing a solution, a cost-efficient solution to companies who have already gone through the pain and the cost of going public. We want to help to maximize the return on that.
I know that you guys host conferences as well for companies that are listed on your exchange. I've been to quite a few of these. Can you explain a little bit about how you're using those conferences to give exposure to these companies?
Yeah, we've been running the virtual conference product for about 10 years now. So it's been interesting, certainly over the last year plus, to see a lot of other different vendors embracing the same, the same philosophy. I think the main difference is that our technology was built specifically for, virtual events. It's not a Zoom or a Teams type setup. And so I think companies enjoy certainly the product, but the ability to, and the convenience to sit at home like this, but, be pushing slides and have a 20-minute presentation followed by Q&A. It's a great product. It's a bolt-on to being traded on our QB and QX markets. It doesn't replace traditional IR. Of course, you've got to service and maintain the quotation here. And so we do a lot like the conferences where you're able to reach, some companies have had thousands of attendees listen to their presentation over time. But I think, most small cap companies, if they get 30, 50 or 150 names following their presentations, I think that's a good result. So the thinking with virtual conferences was, let's use technology in a smart way to just help support companies. And I know, Rob, you do a lot of these types of interviews. I think, the two go very closely hand in hand. If you've got a story, you don't want to be the best kept one in the industry.
That's right. And you mentioned education. Is education geared more towards companies or investors, or both?
I think it's both. Certainly, my day-to-day is speaking directly to companies. But I think a lot of the time when companies join our markets, a lot of the time that stems from a conversation with US investors. Our phone rings frequently when companies not in the last year, but historically have been going to New York and Texas or California and doing some road shows. And investors say to them, well, that's great, but when are you going to be quoted or listed, or when can I trade you, using my US account? And that is really the basis for the solution that we provide.
So last question for you. I'll leave this one open-ended. Anything that we haven't discussed today that you would like people to know about the OTC markets and how you're helping match investors and companies?
Just look, first of all, thank you. I definitely appreciate your time. I welcome these kind of conversations, and whether you're an investor who just wants to learn a little bit more, or if you're a company who is looking at the US and thinking about the plan and how to market efficiently, you're welcome to call or email anytime. I'll go ahead and give my phone number in case anyone wants to give me a buzz, but it's 347-383-5521, and my email is cking, C-K-I-N-G, at otcmarkets.com.
And are you the first person to contact if a company is interested in getting a listing?
Yes, and if it's not a region that I look after, I obviously have a team of colleagues that would be happy to arrange a meeting.
Okay, fantastic. Thank you so much for coming on the program, Chris. We really appreciate it. It's been an education for me to work with you behind the scenes a little bit and learn a little bit more about your markets and how you go about it. And especially in the resource sector, I can say it's been a really big help. The resource sector right now is not the sector du jour. Of course, it's technology and other things. And we try to do everything that we can to help those resource companies, who are often very small, single mine companies, to reach out to investors to get their funding. Because after all, we don't have the mines, then we don't have cell phones and cars and things like that. So we all depend upon that production. So definitely want to thank you for your efforts and appreciate you guys putting together this market for these companies so that they can have access to US investors.
Sure. Thanks again, Rob. Appreciate your time.
All right. We'd love to have you back on sometime in the future. Appreciate it very much.
Cheers.